What's going on, everyone? This is Homero. If you guys have been following my YouTube channel, you guys know that I talk a lot about real estate investing and mostly focused on mortgage note investing. And I'm here with my good friend Joe. And in today's episode, we're going to be diving into what is actually a note. People often ask, real estate note, mortgage note, what is it? Let's go ahead and start breaking that down, Joe, to help people understand the basics of what actually a note is and how we are investing in notes.
Well, let me start with why do notes exist. Notes exist simply because most people do not have enough cash to buy whatever they're buying outright, so they need a loan. That's what a note is a loan to pay for what they're buying over time.
I would say you can almost simply think of it as an IOU.
It is.
Right? It's an IOU documented, right? Where it says who made the note, right? Who is the lender on the note and who is the borrower. And on the actual note, it's usually 1 or 2 pages, sometimes 3 pages. This is actually in front of me. I have an actual mortgage note that we're reviewing that's actually 2 pages long. And on the very bottom, it's signed by the borrower. So if you've ever bought a vehicle, you've actually probably signed a car note, right? And on that contract, it breaks down what the sales price is, the down payment, how much you're exactly financing, what that interest rate is, and what are your monthly payments and for how long. So in a mortgage note, it's fairly similar, right? Let's talk about some of those things. The lender, right? And the lender typically can be an individual person. It can be also a bank,
a credit union,
an entity, a trust. It can be a series of those things, but it specifically dictates who is the lender and then also their address, right? How are they going to make payments or where can they make payments? So that's all on the mortgage note. What are some other things that are on the mortgage note, Joe?
Well, always there's a start date of when the loan was originated. There's a length of the loan. How many months is the loan for? With a car, that would typically be 48 months, maybe 60 months, maybe 72 months.
Right.
With a home, it's 10 years, 20 years, 30 years. The interest rate, the monthly principal and interest payments, those are all key features of a note.
Yeah, I mean, you always want to actually look at, if you bought a house, you can actually go into that big stack of papers that you signed off and the title company gave you in your closing documents, and you can look for the one that says real estate note. And if you did a loan through a bank or whatnot, more than likely that note documentation and paperwork is probably about 4 to maybe 6 pages long, just because there's a lot of more jargon and things based on attorneys drafting up those documents. And one thing that's actually pretty important and something that people aren't really aware of, on a lot of the mortgage notes, you'll see something on the language that says and or assignees and or successors. And what that usually means is that if you bought a home and then after a few years you were making payments to, let's say, Bank of America, Wells Fargo, Chase, whatever the bank is, and then after maybe a year, 2 years, or 3 years, you get a letter saying, hey, your mortgage note has actually been sold over to Joe, for example. You're no longer going to be making payments to us, you're going to be making the payments. And on that paperwork, they basically assign over that mortgage note.
Why would they do that? Well, they may have needs for immediate cash. They might have a better thing to invest their money in. They may want to just turn over their money and acquire new notes rather than one that's been paying for a few years. In the meantime, they've made all that interest on the note when they sell it to the next note owner.
And on the mortgage note, also the language that is important in there, it's typically what is the note secured by. There's typically language in there that it's secured, and you got to follow the deed of trust. The deed of trust is another separate document. We'll do another video talking about what a deed of trust is and how that actually is a security and gives you the permission to foreclose on a property if somebody defaults on their mortgage note.
Right, so if you don't make your car payments, they're going to send Guido after you. If you don't make your home payments, the bureaucracy at that bank that owns your note will get involved with their collections department to try to get the note paying again.
And on the one other thing to add to the mortgage note, Joe, is it obviously gives you when the note is due, right? And typically, a lot of people don't know this on a mortgage note. Obviously, for a lot of people, it's usually due on the first of the month, and it doesn't really become default or delinquent until about, depending on the 15th, 16th of the month.
Right.
Some people freak out if they haven't made their payment by the 2nd or 3rd. It's not late. It's not considered late until about the 15th or 16th of the month. Obviously, you got to read your language and read your actual note and deed of trust.
Speaking of that, we originate a lot of notes for people who are self-employed, and often their income is up and down from month to month. And so especially in that population, we don't get too upset if the note is a couple of weeks late. We know that over time it's going to even out, and by and large that is the case with the population that we deal with when we originate notes.
Yeah, for the majority of our loans, they're self-employed. Some of them, they get paid depending on their business model, right? Sometimes they get paid once, twice a month, or whatever the case may be. But yeah, I would say for the most part, most of ours are paid anywhere from the 1st to the 15th. But if they're not paid on the 1st or 2nd or 3rd or 4th or 5th, we're not freaking out. We know that usually they're going to be paid by the 15th or so.
We'll have a different video short on what happens when a note goes bad. It doesn't happen very often to begin with, but there are well-documented legal procedures that can be followed to get that note back in order, or to send Guido in to take the car back.
One of the things that I want to help people really understand is that if you drive to any major downtown area, you're going to see a lot of the buildings are usually banks and insurance companies. And what do they mostly own? They don't own really a lot of the physical real estate. What do they own? They own a lot of debt. They own paper. They own a lot of notes. And for so many years and so long, the banks make the majority of their money by loaning and having notes, right? And one of the biggest questions is, can I, as an individual, can I be a note holder? Can I buy notes? Can I originate notes? And we're going to be talking in deep dive into another video on how exactly you can participate and you can be and start building your own quote unquote bank, and just like me and Joe have been building over the last couple of years. So make sure you subscribe, make sure you stay tuned in. If you're liking this content, put a comment, ask your question. We'll make sure to answer it for you, and stay tuned for the next video.